Our guest at PE Forum today is Ramsey Mankarious, founder and chief executive officer of Cedar Capital Partners. Today, we will discuss the investment thesis behind the platform, the evolving dynamics of value creation in luxury hospitality, and the key transaction and experiences shaping his approach. Ramsey, thank you so much for joining us today.
Pleasure to be here. Thank you.
So we have some hot news with you because you just signed with L Catterton Real Estate and you launched a strategic luxury hospitality platform. I wanted to know, in a timing that's very tense, why do you think it is the time to deploy capital in this segment?
I mean, first of all, there's always issues coming up in the market. So we're looking at it in a longer term perspective. And for us, today is the right time. It's very simple. There's a lot of demand from the luxury travelers, and there's very little supply. And this is particularly so in Europe. And this is why we're doing it now. We've been working on the project for a couple of years. The fact that it's being launched now and there's more uncertainty in the world, there's always uncertainty in the world today. But we think it's a great time to go forward and start our transactions.
So you bring, the hospitality expertise, and L Catterton, they have more background of consumer-focused DNA. How does that complement your platform?
I've known the team at L Catterton for 20 years, so it's not a new relationship. It's something we've been working on for a long time. And we have great, obviously, expertise in hospitality. This is all that we do. But also, L Catterton has developed many hotels. So, in addition to their real expertise, which is in consumer goods and retail and development, I think combining both of our resources together is what really makes it interesting. Doing a hotel, a luxury property, isn't just about finding the best location and developing it and renovating it the right way, which of course are all very important. Equally as important is kind of the placemaking. How do you get the right restaurant in the hotel, the right retail, the right spa? How all of that works together is what we're both very, very good at doing.
And so the platform started with acquisitions in France, in Portugal. And so how does that reflect your broader investment thesis?
Our focus is on Europe and in the U.S. So our first two hotels fit very much with what we're looking for. The next couple of hotels we have in the pipeline happen to be in the U.S., but we're very opportunistic. We are targeting existing hotels in those markets, and whether the next one is in Europe or the U.S. is honestly very opportunistic, and we're very flexible in that case. But Europe and the U.S. is our focus.
And so you said you look to target around 10 to 15 properties, sorry. So what is an ideal asset for you when you're sourcing now?
Yeah, an ideal asset is an existing hotel, existing luxury hotel in well-located key gateway city. So we're targeting, and by the way, that could also be a resort destination. So we're looking for London, Paris, Amsterdam, those types of markets, and not the tertiary markets. So by definition, luxury hotels tend to already be in the key gateway cities. So we're looking for a luxury hotel, but ideally that is not performing that very well. Something that we can improve. And that could be either in the form of a renovation or in the form of improving the financial performance of the hotel. And ideally both. It's a hotel that's not doing well financially and that needs a soft renovation. That's what we like. The more things we can fix, the better we like.
And so how do you balance when you have a iconic destination and you need to reposition an underutilized asset? What's your formula?
Every project is different. This is the fun and challenging part about what we do. So there is not a formula that every hotel needs to do this or fix this kind of operational. It really is very different. Our two first assets that we bought couldn't be more different. The Ritz-Carlton Penalonga in Portugal is a good asset today. It's performing well, but there's lots of upside in terms of improving the rooms, improving the public areas, improving the golf, but it's an existing cash flow producing asset. Our other hotel in the south of France currently is closed. So that one is going to be a lot more heavy lifting. We're going to do a renovation of the entire hotel and reposition it to a super luxury property. So again, same thesis, but very different ways of how we're going to get there depending on on the asset that we're buying.
And if you look at the landscape, how do you would say this platform differentiates itself from other private equity targeting luxury hospitality?
Interestingly enough, there are no other investors that are doing what we're doing in a fund format. There's obviously a lot of private equity funds and lots of managers who are buying hotels, but those hotels form a very small component of their bigger real estate portfolio. There are no other exclusive luxury hotel private equity funds. I believe we'll be the first ones out there. And this is one of the appeal. We want to create an institutional quality portfolio that will focus just on luxury because this is all that we do. We're not going to be doing residential, retail, offices, which is what all of our peers are doing. We're focused purely on hotels.
But when you look at hotels, you also have, there's a saying that it's a prize hotel, which in other words means it doesn't generate
Yeah.
any revenue, or it's just
Yeah.
a luxury to have.
Yeah.
How do you analyze that?
We don't analyze that at all. I mean, I know what you mean, and the vast majority of people assume that a luxury hotel will be owned by a high net worth investor,
Mhm.
and it's a trophy hotel and it's for the ego. But that really is not the case at all. I mean, our business is purely financially driven. We've achieved a 23% IRR on our realized investments over the last 20 years. All we do is we're doing this purely because we're making more money than other asset classes. And to be fair, I always joke that, lots of billionaires who own hotels aren't billionaires because they're stupid, right? They're very smart investors. And hotels, especially luxury hotels, are great, very safe haven, but they're great cash flow producing hotels once they're performing. And while a lot of investors will own a hotel for 20, 30 years, which is not how most private equity funds look at it, that doesn't mean it's a bad investment. They just have a very different holding horizon. Our focus is very much to buy a hotel, fix it, and sell it within 6, 7 years. So we're very private equity minded, and that's what we've always done. And we do it because a lot of people lose money in hotels because they don't know what they're doing in hotels.
Mhm.
It's a heavily operationally focused business. It's a specialist business. And honestly, if you don't know what you're doing, you shouldn't do it. For us, we're not doing office buildings because we don't know office and retail. We are focused purely on hospitality because that's all we've ever done in the last, 30 plus years.
And if you take Europe, highly regulated, especially when it comes to construction, redevelopments, is this something that you see as a hurdle or as an opportunity because you're willing to bring your sleeves up and go to work?
For us, that's an opportunity because we're based in Europe and every market, like you said, is completely different, right? France is different than Italy, which is different than Germany. And we've worked in all the markets across Europe, so we know how to do that. If you're coming from North America, for example, which is very much homogenous, and you come to Europe thinking, oh, this would be the same, it's very difficult. But for us, that's a competitive advantage because we know how to work in these markets. And we've been working in these markets, our entire careers. So this is something that we do. This is what we understand.
The luxury market is, very specific and it's very competitive.
Yeah.
For you, what does value creation mean at the end?
We're very cash flow and IRR focused. Value creation for us means we're increasing the bottom line of the hotel and increasing the value when we exit. And we achieve that really in two ways. One, the operational performance of the hotel, making the performance better. And two, the physical asset, where we can take a hotel by renovating it, by improving it, we're increasing the value. And that combination of those two assets is how we really create value and upside and IRR for us. And every asset, our hotel in Portugal will be much more operationally focused. The hotel we just bought in the south of France will be much heavier on the renovation side because it's closed. So again, it's different for each asset, but those are the two things you have to get right.
And what is the most important in your view? Is it the branding or is it the operation, to bring in the returns that you're mentioning in that segment?
They really go hand in hand. If you have a great operation, you could do well. But if you have a great brand, you might do well. But you really need both. The brand is so important in today's world, particularly for the luxury travelers. Having a brand on the door of the hotel is very important. It's just like buying a bag. If you're buying a Louis Vuitton bag, it means a lot versus just buying a bag without a brand. They both achieve the same function, but the brand gives you huge differentiation and value creation. And that's the same thing with a hotel. And operationally, you still need to deliver. Just because you have a great brand, if you can't perform, if you can't bring money to the bottom line, it doesn't really that's not what you're in it. Then a great brand without great operation means nothing, and vice versa. You need both of them to work well to maximize your value.
There's a bit of bias with the example of the Louis Vuitton bag, but
A,
we will let it
a
through.
little bit. I don't want to say anything else, but
No,
yes.
no, no, we're fine. We're good. And so you mentioned, the travelers, the high net worth travelers, they're becoming much more demanding. How do you adapt to this need? How do you adapt to demand? And when it demands especially a lot of capital in order to follow the needs.
Those demands are always changing. And
Mhm.
if you look at a luxury hotels 20 years ago, 10 years ago, what constitute a luxury hotel 20 years ago is very different than today, right? And that's always changing. And that's the opportunity for us of buying an older property that hasn't kept up with those changes to be able to make the changes to maximize the value. It used to be, I don't know if people remember, you used to pay for Wi-Fi, you used to pay for a fax in your room. Today, those are like basics. If you don't have those things, there is no more fax. And if you don't have Wi-Fi for free, that's not luxury. That's not even a normal hotel. And having the right restaurant and not just a small, spa. Today, luxury means you must have a much larger, full facilities in your spa. You must have many other factors that weren't so critical 20 years ago or 10 years ago. And that's the challenge and the opportunity. That's why location is always still the most important. And even a hotel from 20 years ago may still be in the best location. But unless you keep up with all the other facilities and amenities that guests want today people are traveling with families or multi-generational travel, which wasn't so much the case 20 years ago. So designing your room, designing the bathrooms, your suites to cater for those guests is something you have to continuously do.
And so you mentioned you're very opportunistic with a focus on Europe. What are the emerging luxury destinations that you are looking at today?
To be honest, we're not looking at creating new luxury destinations. There's
Mhm.
lots of wonderful places in very hard to get locations. That's not our focus. Our focus is on the existing luxury destinations that we know it's there. There's wonderful places that are brand new, but our objective is not to go there and create something new. Our objective is to work on the existing destinations and to find hotels there that are not performing well that we can maximize.
So if somebody comes to you with two opportunities, one that's, ground up development, and the other one is a iconic hotel with a repositioning, but a lot of, regulations, a lot of things to do. Which one do you prefer?
It's a no-brainer. We always do the repositionings. And again, we're not doing developments. If
Mhm.
there's one very, very unique opportunity in the right city, in the right location, we'll do a development. But our focus, 95% will be on existing hotels. That great hotel that needs to be repositioned is what we love. Doing a development, it takes much, much longer. There's planning risks, there's so many other risks involved. And also, it's very hard to find a piece of empty land or building that you can tear down in Europe, for example, because it's just huge barriers. Everything is listed and protected. And by definition, the luxury hotel will be in a very prime location, which means you're not going to be able to do it. So if it's something special, we will look at it, but vast majority of the time we'll do the existing assets.
And within your strategy, we're noticing a new breed, I would say, of independent branding strategies. Is this something that you look at, or you just prefer to go with, the global hotel operators?
We're flexible. We prefer the global operators because it's a proven brand. Those brands, whether it's the handbag or the hotel chain, makes a huge difference for us. If there's a unique property, we're not going to find a hotel that has no name and just say it's going to be a great hotel. There's a lot of hotels that have very iconic brands that are very independent, that have been around for more than 100 years. We would look at those because they already have their own brand. But ideally, we would work with one of the big international luxury brands to work together as a team to maximize that hotel.
Looking at hotels and ownership of hotels, is there's also a history of wealth making around in Europe. If you look at, throughout the 20 past years, do you notice a change in the your typical hotel owner or family ownership?
Definitely, and more so than than the U.S. The U.S. has always been vast majority of investors have been institutional type investors, pension funds, REITs, sovereign wealth, private equity funds. In Europe, it has shifted tremendously in the last 20 years. But even then, there's still the vast majority of hotels today in Europe are owned by families. Okay, whether that's luxury or mid-market or three-star hotels, for example. But that has changed a lot. It's become much more institutional. It's still not as much as in the US, but it's become much more institutional and it's only becoming more so. And this is, interestingly for me as well, not only the city center hotels, but also the resort hotels, which tended to be, again, more family owned. But after COVID, the number of very large institutions that went into the hospitality space and into leisure space, particularly, it just kind of skyrocketed. So we're becoming much more similar in style to the US than we have 20, 30 years ago.
You mentioned the restrictions when you look at, prime properties
Mm.
in prime cities, but many of the investors in real estate, in hotels, look at it and tell you, if there's a development, well, we add value to the development, and the
Yeah.
hotel is the cherry on top. Is this
Yeah.
something that, you could collaborate with, or you think it's totally different from your strategy?
No, no, we definitely collaborate with that. The key is to make sure that the hotel, that cherry on top, works on its own because
Mhm.
lots of developers do residential projects and they sell the residences and they want the hotel because it helps them sell the residences at a higher number. And almost the hotel is irrelevant for them because once they make the money off the residences and then they want to sell the hotel. For us, the hotel is the main driver. So if that hotel makes sense on its own, we're very happy to do that. If the hotel is just being developed to sell the residential and doesn't support itself, we definitely don't do it. And we see so many of these projects that we don't touch because it doesn't make sense.
Okay. And if we move on to your personal career, your journey, you've built, a career across global hospitality platforms before founding Cedar Capital Partners. What key experiences would you say, helped you shape this investment philosophy that you shared with us today?
To me, honestly, it's always been working with the right partner. In all my career, all of our hotels, we've always had different partners. And that is the most important thing. Having the partner where one and one equals three is really the most important. And we're fortunate enough in our kind of stage of development that we're able to work with people that we like, that we want to work with. And that has been the most successful thing. The thing that has made us more successful is really the partners we've had over the last, 30 something years.
And throughout your career, is there, a deal in particular that, that stays in your mind?
All it's funny. People always ask, "What's your favorite hotel?" And to me, they're all like children. They're all my favorite hotels. They're all equal. I guess the one deal that has been a very good success, and we really enjoyed doing it from the beginning, was the Hotel de Berg in Geneva.
Mhm.
That one was even more so because it was already one of the best performing hotels in Geneva. It's much easier to take a hotel that's not doing well and mark up to the better hotel. But this hotel was already the number one hotel in the market, and our business plan was to take it to a next level. And we did. We spent a lot of money. We took a big risk, and it's been a huge success from the minute it opened. So very proud of that one particularly. But honestly, all of the hotel have their own little special memories for me. They're all very nice.
And so, among all your children, is there
Yes.
a number of rooms that you need, a number of, how do you see that you look at this transaction or not?
Yeah, when we look at a hotel, we always think who are we going to exit to. So by definition, we're looking for institutional quality hotels. So that means we need to be 100 rooms or more. It needs to be well located. It needs to be professionally managed, and all of those things are kind of the basics. Now that it has to be financially viable. I mean, no matter what, for us, it's the bottom line. We don't own hotels because we love or have pride of ownership. That's not us. We're buying a hotel at the right price to fix it, sell it, and hopefully make a lot of money. So we need all of those boxes to tick. And by the way, maybe when you're traveling personally, you might want to stay at a small boutique hotel that has 20 rooms, which is wonderful. But as an investor, that 20-room hotel doesn't make any sense. It needs to be much bigger. So just because I like to stay in somewhere else doesn't mean that's where we'd like to invest. We focus on the bigger the better. That's really our ideal goal.
And throughout your experience, you would say that on average, the most difficult part is the negotiation for the acquisition, the repositioning, or the exit.
The most difficult part are the first two, finding the hotels and fixing them. The exit is the easiest part. There are lots of people, high net worth families, institutions, REITs, private equity funds who want to buy luxury hotels that are performing well with great cash flow. Finding those hotels at a price point that works for us to give us the returns we're looking for is the biggest challenge. So once we get that challenge over, then the next big challenge is obviously doing all of the work in the middle. And that's really where we excel. I say that's less challenging for us because that's what we do every day. Finding them is hard. Fixing them, improving the performance is our bread and butter. This is all that we do. So it's less hard than finding them. And then selling is the easiest. But selling is also just as important. You need to find the right partner, the right person who's going to buy it at, at the right price.
And let's say, what is throughout your experience, was it more shaped by the successes that you mentioned, or there was some point in time where a transaction didn't go the way you wanted? And what did you get out of it? What did it teach you?
I think you learn more from your failures and your successes. And I think the most important thing I've learned in the last 30 some years I've been doing this is that you have to have the ability to hold. Hotels, just like real estate, are cyclical. I have no idea when's going to be the next financial crisis, when the next COVID is going to happen. What you want to be able to do is to make sure that you have the ability to hold and not to be forced to sell when the market is down. That is the most important lesson I've heard that I've learned in the last 30 plus years. When you have the financial crisis 2008 and 9, if you sold for whatever reason, you were going to lose money. It was very simple. If you were able to hold, then you did very well. The same, if you were during COVID and you had to sell, you lost money. So having that ability to hold, to give yourself the freedom to be able to sell when the market is in a better position, for us has been the biggest lesson.
And does that demand a lot of planning, sacrifice? How do you plan for a financial crisis or for
You,
COVID?
you can't. There is no way you can plan for COVID. You can't plan for financial crisis. You really can't. You have no idea when a war breaks out. It's those things are out of your control, are the most challenging, but that is our business. You have to adapt to that, whether it's higher labor costs, or people aren't traveling because they're afraid of traveling, or you have inflation. All of those things is what we do every day, and that's just part of business. What you plan for is to have an investor, a partner, the fund like we do, which has a longer investment period, because you cannot buy a hotel and expect to buy it, fix it, and sell it in 4 to 5 years, and then COVID comes. Well, okay, you did a great job. If you sell it, you'll lose money. You have to be able, if that situation comes, to be able to hold it 6, 7, 8 years until the market is in a better position. That's the key. And this assumes you know what you're doing. The things that are out of your control are the ones you're trying to factor for by having more time. If your hotel isn't performing well and you can improve it, having another year or two is not going to do anything. You should sell. If
Mhm.
financial crisis comes, that's when you want to be able to hold, because it doesn't matter who you are, you're going to be negatively impacted if you're forced to sell.
And you mentioned, different private equity within the real estate domain. If you look at the ones that are in the, elderly care or in
Yeah.
the post-care hospital, do you see that there's possibilities for you to move towards that segment or collaborate with some of these PE firms?
We have a lot of people ask us to do, they think heads in beds, whether it's a hospital or student accommodation or senior living, it's all very similar. Uh,
Hmm.
the simple answer for us is no. We are very good at hotels. And even within hotels, we really focus on the luxury side and lifestyle portions of that. So we're very much a rifle approach. We're very good at this, and this is all that we do. So we do residential when it's part of a hotel. Almost all of our resort have a residential component, but that again, the hotel is a driving force. But we haven't done, and we don't plan on doing other kind of beds, the other sectors within that. We're staying with the hotels.
And so for you, if you look at, 5, 10 years down the line,
Yeah.
what would you consider success and a positive achievement?
Yeah, success for us would be in the next 3 to 4 or 5 years to have bought our 10 to 15 hotels, and we're very much well onto that. To have worked, improved them, to have sold some of them, and to be in that position, and to then started our second fund. We expect to get those 10 to 15 hotels purchased in the next 3 years at the most. So hopefully those are purchased well, we're being worked on, and then we're starting our second portfolio of hotels.
Ramsey, last question. Do your LPs ask for discounts when they go to your hotels?
It's a question I've been getting asked a lot lately, and yes, we treat all of our LPs, whether they all get a discount, and they all get kind of the VIP treatment, which honestly is much more important for all of them than the discount. But I've been asked that a lot lately. But we'll do that anyway. I mean, they're the shareholders, they're the owners of these hotels. It's their hotels in any respect.
And do you feel that there's a specific category of the type of LPs that, are interested in this type of investment?
The luxury hotels. LPs love luxury hotels because they associate it, they know what it is, they've stayed at a luxury hotel, they know what makes a good luxury hotel. So they're all honestly our best critics. Every one of our LPs, when they stay at a hotel, I get a note back. The service was great. This wasn't so well. We really should look at improving this. So everyone is a critic, which is great because that's the feedback we need. There's always room for improvement. But it's also very hard, I mean, when we go to hotels, we're the worst customers. We're always taking pictures, seeing how we can improve something, see how we can learn from others. So it's very hard for us to go on holiday in a hotel, where it's a tough business for that.
Basically, you're going on a working holiday.
Every holiday means it's a working holiday. I mean, imagine you going on holiday in an office building. It's not the same. For us, hotels is a business that we love, but it's always a bit of a working holiday, no matter how relaxing or how remote the hotel is. We're always looking for good ideas.
Great. Ramsey, thank you so much for your time.
Pleasure. Thank you. Thank you for having me.